All right, guys, I want to do a midweek update, and I have a few different things I want to touch on today. So we'll just jump right in. I want to start with market breadth, as we usually do. Looking at the SPY here, we are in a solidified downtrend. Nothing new. If you've been to this channel before or any time in the last few weeks, that's what I've been saying, and it is the way things remain. We are in a lower low, lower high environment, solidified downtrend. We lost the daily, we lost the weekly. We are currently testing the monthly. All right, major significant levels here. If we jump out to the weekly, things are not looking great. All right, could things bounce from here? Yes, of course. Will they? I don't know. Neither do you. So what do we look for if we're going to change character, if we're going to begin to favor upside of price action? I am bearish as a swing trader from 3 days to 3 months. With the information that is presented to me from a technical analysis perspective, I am bearish. We're in a downtrend. Give me a break. All right. But if I'm going to switch to favoring bullish price action, we are simply looking for a change in character, meaning taking out the recent lower high. Okay. And then from there, making a higher low. Let's clean this up. One more. We want to change character, take out the swing high. Okay. That could happen today, tomorrow, next week. It could not happen. Of course. Anyways, we want to take out that swing high. That would be step one. From there, where do we push up to? If we pull back, I don't know, but we'll see. But we will pull back. So that pullback becomes significant. Okay. So you get the change in character. All right. Meaning we breach the recent lower high. Okay. And then if we pull back and hold that level and push up again, that's about as strong as a change in character could look. Okay, but it would be very normal for it to pull back through that level, and then from there you just look for a higher low, okay, above whatever the previous one would be at that point, and you could consider initiating risk. That was dramatic. You could consider initiating risk back up through the area on a move like that. I would keep it tight, okay? We don't have to get the first move. If it's going to be a rally, as I've been saying, it looks like this. Why am I putting all those dots on my screen that are going to drive me crazy? Anyways, if it's going to be a sustained true follow-through rally, there are plenty of triple R triggers along the way. Okay, it happens every single time coming out of a corrective market. I've been talking about this, and I will not stop because it is what a change in character looks like. Okay, you get a change in character, a higher high, higher low, rally. Okay, look at all the triple R's in here that worked. Change in character, higher high, higher low, rally. Look at all the triple R's in here that worked. If you don't know what triple R means, I'll touch on this again in just a moment when we come back and I talk about some of the longer term ideas, but it's simply a retracement, a reaction, and a remount. And it is my way of quantifying a structure rally. Okay, I want to trade with the trend, with the momentum of the market behind me. I want the markets to be in a trend, okay, an uptrend if I'm trading upside of price action long, obviously. So I look for the market and the indexes, SPY, QQQ, IWM, RSP, the indexes to be in solidified uptrends, at least a weekly uptrend, okay? We're in a downtrend now, so first it would be a daily, then a weekly. Anyways, what I'm looking for is a retracement, a reaction, and a remount, okay? So I use a 9 EMA and a 50 as my two moving averages. I also have the 200, of course, but these are the main moving averages I use, and what I'm looking for is trend continuation. Guys, pullbacks are a part of a healthy trend. It happens. You don't want to be buying breakouts, okay? My historical 13 years in the markets, I do better doing this, okay? Waiting for a retracement, a reaction, and a remount, and a resumption of trend. It gets us in here, okay? As opposed to up here. It gets us in here. It gets us in here. It gets us in here, here. Like, all right, I don't want to over-explain it. There are videos on the channel. Go WarrenSnax triple R model. You'll find it. I've got plenty of free stuff out there. I have 5 other trend continuation models if you want to work with somebody that's been in this for a while, but more importantly, understands that you need help, you need a mentor, you need somebody to help guide you through this and keep you honest through your process of becoming profitable in these markets. Something that's bothering the shit out of me right now is all the people on X right now saying, I've never seen price action like this. Price action's never been like this before. And then charging $2,000 for a fucking course. It's like, price action was like this 11 months ago. Like, if you're following people saying they've never seen price action like this before, stop. Like, what? Pullbacks are normal. Like, this happens every 18 months on average. Okay, the market's correct. 16 times the last 25 years. This is normal. What it is volatile. Okay, so it might be frustrating you. It might be difficult. It is more difficult than a clean follow through uptrend. Duh, of course. So you need to have things in place, risk profiles, risk parameters, market profiles, different things, learn how to read market breadth, see the stalling at the top, know when to change your tune, start sizing down, all the stuff. I can help you with that if you'd like, or just keep watching these videos as I give my daily analysis. So guys, that's what I'm looking for, okay? We need a change in character. Otherwise, we're just looking for another lower high to possibly reinitiate some risk back down to the downside. Guys, if we lose this monthly level, we are very likely to test the prior cycle high. It's typically what you see happen, okay? I mean, don't believe me? Let's look at the last one. First you lose the daily, then you lose the weekly, then you lose the monthly, prior cycle high. All right, I mean, just go back and look at it for yourself. You should be back testing. You should be questioning anyone you're spending more than 2 minutes listening to. And you should be unfollowing anybody saying they've never seen price action like this before. My goodness. All right, cues, real quick. You know, we're sitting on a cliff here, guys. We are on a cliff, solidified downtrend. One up day, one up sequence of up days in a row that puts in a lower high below 606. I could care less about, okay? I told you, a change in character. We need it to take this out, so it needs to do something along these lines. We can think about getting long through that. Controlled size, controlled position count. All right, we're not gonna get crazy. If it's gonna become a real trend, it's gonna look like this and give multiple entry points, okay? Triple R, retracement, reaction, remount, retracement, reaction, remount, retracement, reaction, remount, retracement, reaction, remount, retracement, reaction, remount. Money printing, okay? It's the best model I've ever put together myself, guys, okay? If you're struggling in the markets, give this a shot, okay? Stop overthinking it. It's mechanical. It's if, this, then, that. The way I like to say it is I buy the leaders when they go on sale. If they hold structure, I make money. The leaders hold structure more often than not. So that means I'm living in a probabilistic world, okay? I'm trading with probabilities. More often than not, I make money. It's a 2-hour model at a minimum. Guys, it's a money printer, okay? It's one of multiple money printers that as soon as this market cleans back up to the upside, we are gonna turn right back on. I tripled my account in this move right here in 2025, okay? I did 84% in 2024 through that move. Guys, I mean, just come fuck with me if you're struggling in these markets. What I meant to say about that, the models you're gonna understand, especially if you have any market history or background in these markets, you're going to understand my models very quickly. But I think what's helping people is the market breadth, the risk profile, and having someone to talk to. Okay, this is a tough market for most. Guys, give yourself a break. Or who do you think you are? Okay, you shouldn't be dog walking this market right now. This is a tough, snappy market, okay? So give yourself a break, but size properly. And more important, if you need to talk to somebody, I'll take a call with you, whether you work with me or not. Hit me up, WarrenSnax@gmail.com. I'll take a call with you, okay? You probably need someone to vent to, especially if you're struggling. So that's an offer, you know, take it if you want it. We got RSP here, you know. Guys, we're right at the 200. Any bounce that stays below this area would be a short, okay? The 9 would be rolled over. You could short down through that. It's a triple R to the downside. If you don't like trading short-sided price action, then wait for the change in character in the market. I will tell you when it's here. It is not here. A few things I want to discuss. All right, people are asking me about Bitcoin. Look, it looks like another bear flag to me, okay? Same exact thing I talked through a couple months ago, right up in here. It's the same. All right, so that's my thoughts now, and I think, yeah, maybe it would be most ideal to see this thing reverse here at the prior cycle highs, okay, back here. It would be very ideal to see it turn around, and historically, that is what Bitcoin does, okay, but it's not done it yet, and it goes back. If you're DCAing, if you're investing, sure, great time, go for it, okay? I picked a little up in my investment account, I think, that, you know, on this flush down, okay, into prior cycle highs. I picked a little bit up, really not a lot at all, kind of expecting a little bit more. Anyways, guys, look, Bitcoin is going to tell you, okay, when it's ready to go. It's going to break out of this, and it's going to be meaningful, okay? You're not going to have to squint and get in there and like, are we making higher highs and higher lows? Like, it's going to frickin' tell you, guys, and then get the triple R's after that, all right? That's my suggestion on Bitcoin, unless you're DCAing long-term investing. Do what you want with that. We're at a historically good level to be doing so. You could also switch it over to the weekly and run the RSI weekly 30 trigger here and see what we're doing. We just had a trigger, so yeah, it's when I DCA'd. Anyways, yeah, it might roll back over and give us, if this does roll out of this bear flag, I think it's going to test the bottom of this range. Maybe, I don't like the term liquidity sweep. I'm not an ICT person. Come at me. Go for it. Okay. Anyways, might sweep the liquidity. I don't view that as Michael's term, but anyways, guys, it might be drawn down to wipe this liquidity down here. And in that case, I think there would be another RSI weekly 30 trigger. Good time historically to DCA into the best companies, blockchains, ETFs, indexes in the world, all the stuff. All right, guys, so let's keep it rolling here. We don't need to spend too much more time on this video, but something I'm working on is a local presentation, and I'm in Thailand currently, and I'm going to be doing a local workshop. And I'm putting together a presentation for that. And, you know, part of this was inspired from somebody I'm working with in Bootcamp. We were having a call the other day. We rolled over to the monthly. He said, you know, I'm not overly anxious to be in the markets. I want to find opportunities. He resonates with the triple R model and sees it as the entry, which that's exactly what it is. You can see these things running away and trending and just ripping and be like, how the hell do I get into that? Well, triple R, retracement reaction, that whole structure. It pulls back, does not breach the most recent swing low, okay, and re-triggers back through the night. Retracement reaction, remount, that's your entry model. So anyway, we're talking through this and all, and you know, I was like, hey, do you mean that, right? You know, like a lot of people say, hey, I won't press buttons, I won't press too many buttons, and I'd rather not be too involved. And not that this was him at all. I was just talking through things I've heard, and even my own self, right? Like, I know the less I do, the more I make. But at least in investing. But anyways, guys, what we realized, we rolled back to the monthly chart and we just started checking some of these things out. So I'm going to work this into my presentation here locally. And I mean, you can see the numbers right here, monthly triple Rs. And this is since 2000. Okay, most of us weren't investing before 2000. If you're watching my YouTube, I bet my demographic is 75+%. We're not investing before 2000. Anyways, guys, you can see the numbers. Here's the results right here as I go through some of the leaders. You know, this is 7 out of 13 Apple monthly triple Rs worked. Okay, you want to see the visual? Here it is. 1 month. There they are. Okay, so that becomes an argument of what are we doing here? You know, what are we doing here? This is free money. Why is the market hard? It's hard because of us. It's hard because we aren't patient enough to just do this. You know, we say we want to grow our capital. We say all these things, but we see something like this and we still want to go in there and play video games in a choppy downtrend. You know what I mean? I'm talking to some people right now. I'm not doing it, you know, but I've done it in the past, right? So I know it's real and I know people need to hear it and I know people need to look in the mirror about it, right? The markets are actually easier than they can feel. Here's STX. You know, there's the triple Rs. Here's TSM. You know, there's the monthly triple Rs. Above its IPO move, you know. Probably should have started paying attention to TSM and semiconductors in around 2018. Every single monthly triple R, retracement, reaction, remount, every single one works. Okay, so you can do this investing or you can do a 2R model with the stop below swing low, or you can just DCA. I don't care what you do, but it's a money printer. All right, so anyways, I'm working on a little thing here locally. You know, it's like even I got XAR here, right? It's like, how the hell do I get into this aerospace and defense sector? Monthly triple Rs, okay? I mean, I can do this all day, guys. It's just market structure, okay? Leaders, that kind of stuff. It matters, all right? And it simplifies the markets. It becomes a what the hell are we doing? When you start to see data like this, right? When you start to see triggers, every single one of them work. It's like, well, what? Why am I making things so complicated? So yeah, anyways, I got a little workshop I'm going to do live out here and just kind of see. I literally have a vision of creating something where I go around the world. I want to create a one-day workshop where I literally shift people's perspective on the markets. The markets are not a risk. Yeah, okay, the markets can be inherently risky, but the market is not the risk. The market is an opportunity. We are the risk. We are the ones with the app that we log into and click buttons. We are the ones that can fuck this up. Okay, so I'm just trying to give really simple entry models and data to say like, hey, maybe things are just a little simpler than they can seem at times. Oh, I forgot to pull up the SPY. Let's do SPX, just last one here. Okay, there's your monthly triple Rs on the SPX. More often than not is the kind of world I like to live in. So guys, look, if you need help, I have an offer. I'd love to work with you. I am really enjoying working with my people. Guys, this is a shitty market. You know, it is what it is. It happens on average every 18 months. You get a correction in the market, things get choppy. It's volatile. It's not the first time we've seen this price action. Stop following those people. I don't know why, but that really bothered me when I noticed it. I saw, like, I've been seeing it a lot. And then I saw one more today. I was like, wait. And I like clicked in. The fucking dude's charging $2,000 for a mentorship to teach people how to trade ICT. Like, oh my God. Oh my God. I don't know. I've been at this shit long enough. Guys, this is normal price action. Doesn't mean we have to love it. Okay? But we must survive it. Quote, Drunkenmiller, 80% of the people can make money 80% of the time, but kill themselves in the turn. I'm really loving this quote. It's a new one for me, but I'm really loving this quote. What he means is 80% of the people are going to make 80% of their money right here. Okay? And all these rallies, the fucking stock market is usually rallying up. Okay? Period. Period. I'll show you. That's the U.S. stock market, okay? It's usually rallying up. It has corrections. These are opportunities, okay? But anyways, what he's saying in that quote is that it's really easy to make money. I just showed you triple R, 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 triple R. Sorry, one didn't work. Triple R. Sorry if that was annoying, but it's a money printer, okay? Triple R, triple R, I'm going to stop. But, like, guys, okay, one didn't work there. Now you're not doing it because we're under the 50. So 1 out of 3. And then right back into triple R, triple R, triple R, triple R. 1 didn't work. Triple R, that's probably 1. You get stopped on that. You get back in. Right here, maybe stopped again. And then you got a triple R, triple R, triple R. None of these take out recent swing lows. So what are we doing here? You know, so even honestly on these ones, it's not a stop because it didn't take out swing low, you know, so it's actually not a stop. So actually all of those work. Technically all of them work. I would have had a tighter stop. That's why I said I took one. You know, it's all good. More often than not, world guys, what I'm saying is this shit is simple. If you wait for it and you don't kill yourself in the churn, you don't kill yourself in the churn. You don't kill yourself in the churn. Okay. Then it gets back to money printing time, and that's just what we'll do. All right. So, guys, I encourage you to keep it tight. If you don't like trading downside of price action, if you don't like trading this headline-sensitive, heightened risk environment of a downtrend with a war and Trump tweets, like, okay, well, take a walk. Take a walk. What are you going to do? Sit there and cut yourself up and have no money to trade or no confidence to trade when easy money comes back? Like, easy money comes back. The next rally that we're in, it will be easy money. Are you going to fuck yourself up before that? Don't do that, okay? Just don't do that. And guys, I'm talking to myself just as much as anyone on the other side of this video, okay? The big part of why I'm doing this is I say these things. I've been saying them internally for years and years and years. And, you know, I appreciate the audience. But look, I need to hear these things too. So I'm not coming at anyone ever in these videos. If anyone, I'm coming at myself and keeping myself in check. And if it can help somebody, that's great. All right. So guys, we're in a downtrend. All right. Respect it. You got to realize that, you know, the truth is any pops, any rallies should be treated as a lower high threat until we change character. I won't stop saying that until we change character. Otherwise, we are in a solidified downtrend, and I will respect it. I will not try to predict bottom because I'm experienced enough to know I don't need to try to outsmart the market. I can wait for a rally and hop on. Okay? It's that simple. It's that simple. Guys, stay safe, manage your risk. Keep it tight. Things are still shaky. I'll see you soon.